my years here, whatever the future holds, but I really hope that I'm able to make a difference in this country. Financial markets had collapsed in 2008, 2009, and Bitcoin was created to offer an alternative. It's called the Lindy effect. The Lindy effect is a label technological innovations. If a technology comes along and it establishes itself, if it gets created and you have this brand new technology that no one has seen before, and then it spends the next couple of years establishing itself before any other competitors come along. If it has established itself long enough before a competitor comes along, the Lindy effect says that it will win. I mean, Bitcoin is currently sitting at about 67% of all investment in cryptocurrency. Bitcoin has 67% of that investment. That means 33% is allocated to the other 2,500 coins.
This episode on the Reality Shift Show is sponsored by Virtual Actuary, an actuary consulting firm that specializes in clientele in the banking, investment, and insurance sector. Virtual Actuary and Reality Shift have a commended relationship. They have a revolutionary business model. Head on to www.virtualactuary.com for your business's consultation.
How's it, guys? Welcome to another episode on the Reality Shift Show. Today we are interviewing James Preston, and he is the executive editor at Global Crypto, as well as the head of content at SwiftX. It's an absolute honor. He is also a writer and a speaker, and I'm sure the list goes on. And it's an absolute honor. Thank you so much, James. I really appreciate you coming on to the show today.
Thanks, Leetswe. I appreciate you having me on. It's a real privilege to be on the show. Thank you
so much. And I know we chopped it up earlier, but I think just generally, just for perspective, let's just start at the beginning. Who you are, how you grew up, just kind of background to yourself. Yeah.
Cool. So I was born in England. That's always an important part of my story, right? Yeah. To a South African mom and a Scottish dad, funny enough, who met in Canada.
Oh, geez.
So they had lived in England for a couple of years, and after 6 years after having me, they were like, you know what, we can't take the weather anymore. And my mom thought, no, let's go back to my family, let's take it from there, So that's what they did. I moved out here in 91, so obviously interesting time of South African history, or a lot of civil unrest going on in 91, but I see that as as the universe kind of bringing me here for a reason. I love Africa, I love South Africa, and I hope that my years here, whatever the future holds, but I really hope that I'm able to make a difference in this country. I really want to bring about impact in South Africa. So that was, I moved out here in 91, so I was 6 years old, and just went through the various schooling system. We moved around Durban quite a lot. Ended up at Westville Boys High, so right here in Westville is quite close to my heart. We moved here we moved to Westville from Pinetown in 1999, so I've been here now 21 years, and I love it. I mean, my kids now go to the Westville schools, and I studied design at what was then Natal Technikon, and I just had this stirring to go into business. So I started my first business in 2012, and I haven't looked back. I've carried on working in radio just because it's a passion of mine. It supplements the income. As you know, I'm sure in entrepreneurship you need to make sure you've got some kind of supplementary income. If you don't have investors, you need some kind of supplementary income. Yeah, and just haven't looked back.
So let's dive straight into the cryptocurrency. Let's dive straight into the dimensions and what it's looking like currently now in the current climate.
Yeah, so I mean, what cryptocurrency has shown me is that it's taught me a lot about trading, right, and market psychology. Well, a lot of people would know, and your viewers, your listeners may know of things like TradingView, because there's so many different. There's equities, there's commodities, there's forex, and then now of course cryptocurrency. I got into cryptocurrency genuinely because of the alternative Bitcoin offered society. The financial markets had collapsed in 2008, 2009, and Bitcoin was created to offer an alternative. But having got into it, you do realize, like, jeepers, these assets, these digital assets, they wildly fluctuate. 1 minute they're up, next minute they're down. If you can buy them while they're down and sell them while they're up, wow, great opportunities here. Technicals are more important than fundamentals in at least a midterm, short to midterm, right? And technicals are just looking at the chart. What are the markets saying?
Yeah.
The price. What are the prices telling you? Where are the buyers? Where are the sellers? And you can look at that at the chart. You don't need to know the background.
Yeah. So you said Ripple is basically the next currency that's undercurrent that's coming. That's going to be the one that's going to take. So talk to us a bit about that and how you think the dimensions of these different currencies playing together, and who do you think would come out on top?
Yeah, so there's an effect called the Lindy effect. The Lindy effect is a term to label technological innovations, right? And it's basically, the premise is, if a technology comes along and it establishes itself, but before any other entrepreneurs or engineers have introduced this technology, if it gets created and you have this brand new technology that no one has seen before, and then it spends the next couple of years establishing itself before any other competitors come along. If it has established itself long enough before a competitor comes along, the Lindy effect says that it will win over all the others. So based on that premise, it looks like Bitcoin's going to be around as the top gun. I agree with that premise. Bitcoin's now been around 11 years. No one has come close. Ethereum has come the closest to overtaking it by investment numbers. In other words, by market capitalization. The same goes for Bitcoin and Ethereum. Ethereum came very close to surpassing Bitcoin just by market capitalization, but since then Bitcoin's just killed it. I mean, Bitcoin is currently sitting at about 67% of all investment in cryptocurrency. Bitcoin has 67% of that investment. That means 33% is allocated to the other 2,500 coins.
Yeah.
It's at the moment it's a one-horse race. Bitcoin's the winner. I just used that phrase that Ripple is going to be the next Bitcoin based on what newbie investors are saying. I cannot see Ripple overtaking Bitcoin or becoming the next Bitcoin. Bitcoin is establishing itself as a digital version of gold.
I was just about to come to that, because I've heard a lot of talk of how Bitcoin is literally going to be the one that's going to be replacing the gold standard. And so let's just talk a bit about that.
Yeah, so that's where Bitcoin's narrative is now being shaped as digital gold.
Yeah.
It got introduced as digital cash, but the premise was, and it was genius by the inventor Satoshi Nakamoto, to say, hey, I'm going to create digital cash, but it's going to be like gold, right? So in the same way that gold isn't necessarily controlled by the governments, necessarily, because anyone can dig gold out of the ground, anyone can buy gold, and you can't control, again, necessarily, theoretically you can't control its price, but also in the same way that gold is deflationary. In other words, there's only a limited amount of gold in the world, but you can still cut it up into little gold pieces and you can trade using gold pieces, but it's deflationary. You can't make more of it. There's only a limited amount. You have to go and mine it. So that was Satoshi Nakamoto's idea. He was like, so we're going to use it as cash. We're going to spend Bitcoin like we spend cash, but it's going to be deflationary. There's only a limited amount, 21 million. But since then, people have been like, well, we really like the idea of store of value. In the same way people go to gold, they take a lot of their net worth, they put it into gold. They buy gold bullion, they buy gold bars, they buy gold jewelry, they stick it in a safe in their house, they put it in a vault or whatever, and they know that that's going to protect its value against the US dollar if the US dollar either collapses or loses value over time. So now people are saying, well, Bitcoin offers that alternative. I'm not going to put my investment into gold now. I can just do it via Bitcoin, right? And that is, I mean, that's a strong narrative, you know. And then, of course, when you look at the numbers, there's only 21 million of these coins.
So appreciation is
mathematically, the coin should be worth a lot of money.
Yeah. So I think one thing I also wanted to get into was, so what is, you know, blockchain technology, you know, cryptocurrency doing to decentralize, let's say, banking and all of these other, you know, institutions. And now we see these multinational companies that are scared of what's happening. They don't want to support or back, you know, the you know, cryptocurrencies, etc. So let's dive into a bit about that.
Yeah, so obviously the banks are scared because it takes away their edge, right?
Yeah.
Because they were the ones who had control over the movement of money. They had control over the storage of money. All of a sudden, Bitcoin and blockchain technology allows you to be your own bank, right? You can spin up a wallet on your computer. You can spin up a Bitcoin, Ethereum, Litecoin, a couple of the others, Monero, Zcash. You can spin up any one of these wallets on your computer on your own without anyone telling you what to do. And you can now go and get some Bitcoin, put it on your wallet, and then you can access that via your phone. You don't need a bank to do that, right? And so the banks are threatened by that, because before, if you want to store your salary, you need to go open a bank account. Now they've got hold over you. They can charge you bank fees. They can charge you a fee every time you transact. Whereas blockchain technology takes the
middleman out.
That role out of the equation, technically. There's still the idea of, actually, you know what, it's too hard, I'd rather pay someone to do it. You know, I'd rather pay a Luno or a Vala or an altcoin trader or whoever these exchanges are. They're technically becoming the new banks, right? But blockchain technology that was the big invention of Satoshi, was anyone can create a cryptocurrency that is distributed, that anyone can access no matter who they are in the world. Now you can transact value anywhere in the world. So that's the big thing, is it's not only anyone can create a wallet, anyone can transact, but they can do so globally. Obviously your limitations in local jurisdictions are, a bank comes along and says, okay, you know, store your money here, that's your first gatekeeper, but secondly, you want to get your money out the country? There's a whole bunch of forms you got to fill out to do that. With cryptocurrency, first of all, you're creating wallets on your own. Secondly, you're sending it to anyone in the world. And that's what the internet is. The internet is, I can type a message to anyone in the world. I can have a Zoom call with anyone in the world. This video, this podcast is going to the entire world, right? And now the same thing, value is being sent to anyone in the world. And blockchain technology allows that to happen. It's a huge threat to the banks, and I think they're only waking up to it now, and I think it's too late.
Exactly that. So in terms of, you know, your Bitcoin, you know, being this insurance policy as well, you know, let's talk about and dive into persons who are hesitant to explore new markets. How would one go about demystifying the traditional way of investing, the traditional assets, to converge with the current and more, you know, things that's basically what I'm trying to ask.
Yeah, so I think you're asking about people that are a little bit
speculative.
They're a little bit hesitant. They're looking at Bitcoin and cryptocurrency, and they're saying, "Whoa,
they're not risk averse."
Yeah. I think no matter who you are, you need to be very careful how you invest, right? You know, I know people that have over 80% of their net worth in Bitcoin, right? But I wouldn't advise that, because the guy that has 80% of his net worth in Bitcoin is very rich. So the 20% is more than what most of us here in South Africa have in rands, or in US dollars. So, it's a whole different ball game when you go beyond a certain threshold of wealth.
Yeah.
I think there should be a fair allocation to certain assets, right? Whether it's stocks, whether it's US dollar, whether it's gold, whether it's Bitcoin. And I would say to anyone, no matter how risk averse they are, Bitcoin and cryptocurrency is a volatile asset. It is risky, but it is projected to do great things. And so as an investor, studied investor would tell you that if your risk to reward ratio is high, it's a bet worth taking, right? Let's say it just goes to $100,000.
Yeah.
That's 5x the current price, right? So that means if it goes to zero, you lose, let's say you put in, you buy one Bitcoin now, and obviously people need to understand with cryptocurrency you can buy as little as you like, 0.0001 Bitcoin. You don't have to buy one, but let's say you did. You bought one Bitcoin, that costs you $20,000, and it goes to zero. You lose $20,000. But if it went to $100,000, you gain 5x your investment. So your risk to reward on that is 5 to 1. All right, that's not a bad risk to reward to take. So I would always say to potential investors, your risk to reward ratio on Bitcoin is high. It's don't put all your eggs in one basket. Put a small allocation because your upside is so great. It's really not. It's not a case of having to put everything into it. And
let's kind of talk about the dynamics of the market in terms of blockchain and that aspect during the lockdown and what has happened pre and post.
Yeah, so I think what this lockdown has shown, if we look at world markets and global markets, and I think people need to understand, I'm not a financial analyst. I work very closely with a qualified financial analyst, but I personally am not a financial analyst. I have learned a lot from, in essence, my mentor over the last 2 years since I took over Global Crypto, but having watched the market since 2008, 2009, and understanding the banking industry, what lockdown has shown us and the COVID-19 pandemic has shown us, the very sad reality that the banks still have a lot more control than we would have liked.
Wow.
So if we look at the American economy, a lot of money has been pumped into the system. If we look at the debt to GDP ratio, it's climbed. I think they're sitting at about 170%. And anything above 150% debt to GDP is very dangerous. They're sitting at 170%, which is just bad news. Economic approach and steady economic approach to your economy. The American markets have rung a lot of alarms. Why am I saying all that? Because we've seen the likes of stocks, even oil, equities, etc., all get inflated because what's happening is the bankers have been provided a whole bunch of liquidity from the Federal Reserve. And that's happening around the world. It's happening in Europe, it's happening in Asia, it's even to an extent happening in South Africa, but a lot less. But a lot of liquidity has been provided to the banks to buy government bonds, and in turn it creates a perpetual cycle of, well, then investors, these institutional investors, then go on to buy your traditional equities, your stocks, etc. And they're pumping the markets and they're inflating the markets. Then the rest of the retail market, like you and I, goes, wow, Apple's going up. The NASDAQ index, the S&P 500 index, those are all going up. I'm going to climb, and it pushes it up even further. And so the global pandemic has shown us that these institutional investors, they are the guys who have a say on the market. And even unfortunately, we're seeing that with Bitcoin. It is.
Do you think that will sway or change in the near future?
That's a good question. It's hard to say. I think what we are seeing is institutional investors are recognizing Bitcoin as a safe haven asset. And I think institutional investors are seeing, wait, we want to allocate assets to Bitcoin because it's a safe haven asset. Coming back to your original question about the pandemic, what we saw was the pandemic got announced, we just saw markets crash everywhere. Like everybody just getting out. So the institutional investors get out. They say, we're getting out. Markets crash. But then things stabilize. They're like, okay, that's your bottom. Then the governments come in, they pump liquidity into the market. Investor confidence comes back, and the institutional guys pump it back. And that goes for everything else. So Bitcoin tanked, gold tanked, traditional equities tanked. And slowly but surely they all returned as the central banks pump liquidity into these markets. Oil tanked only a couple of months later. Well, not months, a couple of weeks later. Obviously, there was a futures scenario because of the actual travel had been suppressed. So now you've got no one traveling, no need for oil,
Exactly.
and oil warehouses were stuck, and the oil refineries couldn't get their oil into the market, so the oil futures collapsed, right? And it went down to zero. In some cases, there were stories of it going to negative because people were paying, warehouses and storage facilities were paying people to get the oil off their site so that they could accept more oil, right? For me, it's just sad. I see the equity markets heavily inflated. I just don't know how long that's going to continue for, though. There's just, you look at the job debt to GDP and the job losses that have occurred. It cannot be sustainable. There's no ways these equity markets can continue up, perpetually. They have to correct eventually. And I think that's on the cards. In terms of business, the global pandemic, obviously it has affected my speaking. I mean, my speaking career was just taking off. Literally, I'd just come back from Japan and things were looking so great.
Yeah.
Global pandemic hit. So that's shut down. But in terms of other revenue streams, so we sell advertising on Global Crypto. So I write a lot of news stories, I write a lot of reports, I make a lot of videos, podcasts even, for our website. And people still want to advertise there. People have come to us and said, hey, we want to buy banner advertising, we want to sponsor your YouTube video series, we want to sponsor your podcast. And that's been great. If I look at revenue hasn't changed. Revenue hasn't gone down. In fact, it's actually slightly up. And I think that's because cryptocurrencies have done well. So therefore, the cryptocurrency companies are doing well themselves. So they're saying, we've got more money to advertise. They're coming to people like me saying, we want to advertise with you.
Yeah.
So I'm really thankful that my entire business is digital.
Yeah.
And I'm grateful. I'm just lucky. I can't sit here and say, we made a conscious decision.
Yeah.
I'm lucky.
Yeah.
I'm lucky that this pandemic has caused people to shift to digital. They're trading cryptocurrencies to try and make extra money. That's made cryptocurrency companies do well, and therefore come to people like me, where all my stuff is sitting behind a microphone, sitting behind a camera at home, writing at home, putting stuff on the web. I don't have to go anywhere. Yes, we had events that I'm not going to anymore, but that was a small part of our business. Our bigger business was our website and our news portal. And to be honest with you, Litzwe, it's luck.
Yeah.
I have no other way of saying that. It's luck.
Yeah.
I was at a business before this where I ran the marketing for a tank company, and they got hit hard by COVID.
Yeah.
If I was still there, I probably would have had to take a salary cut or had to retrench staff. You can through hindsight, the pandemic, and be like, okay, now you got to adjust your businesses, have a whole bunch of revenue streams, have side hustles, go digital, so that in case anything happens, you're not at risk of getting shut down.
Yeah. Well, I think we've dived into a hell of a lot. I really appreciate you, and I really appreciate your content and you just coming onto the show. Would you like to give out your website, your handles to the general public if they want to engage with you, do business, and etc.
Sure. So my big thing is Twitter. I'm a Twitter addict. It's actually how I got introduced to cryptocurrency.
Okay.
And now I'm giving back. So I'm on Twitter, James Preston ZA. I'm pretty much James Preston ZA everywhere. I've taken a break from Facebook, so I'm not on Facebook right now. I will be back.
Okay.
But Global Crypto TV, so your two are Global Crypto TV
Okay.
everywhere. So that's Instagram, that's LinkedIn, that's Twitter, that's Facebook even. Global Crypto TV, one word. So you just hit facebook.com/Global Crypto TV, Instagram.com/Global Crypto TV. Same goes for me personally, James Preston ZA. So I'd love it if your listeners and your viewers could follow me on Twitter. That's where I'm most active, James Preston ZA. I am on LinkedIn. People can hit me up if you have any questions. Hit me up on Twitter, LinkedIn, and I'll gladly answer any of those questions. And yeah, I would love to help out. If anyone has any situations where they want some advice, I'd gladly be able to offer them what I can, the time that I can give. But yeah, man, thanks for the opportunity.
Thank you for coming on to the show. And guys, please do like, subscribe, and comment at The Reality Shift SA and at Leto Immortal on Facebook, Instagram, Twitter, TikTok, and YouTube. And yeah, we're going to keep progressing, keep growing. And James, thank you so much once again for coming on to the show.
Thanks so much. It's been a real privilege. Thanks for having me on.
Cheers, guys.